The best predictor of success, the innate ability to allocate time properly. Keith Rabois. My friends, each and every day you got to allocate 10 to 15 minutes to be with us, to follow these charts. Practice trade all you can. It doesn't cost you anything but that investment of time, which is the most precious thing I know you have. Don't waste it. Don't worry about how long it's going to take you to master the charts. When you master them, you will make up for all the time you ever spent. Stick with it. Think about it. Learn. Let's jump into these charts. The S&P 500, NASDAQ 100, gold, and Bitcoin are all up today. Only thing down is 20-year U.S. government bonds. Now, let's jump into the S&P first. S&P and the NASDAQ both up today, 1.48%. So again, about 1.5%. Exactly what we were predicting yesterday. We were 80% bullish on the NASDAQ. On the S&P, 75% bullish on the NASDAQ. Respectively, we had an 82 and a 78% backtest accuracy. And what did we see being laid down in the morning? Green half-day candles in the morning and afternoon. Okay volume. And of course, we ended the week up. Nice big strong green up candle. Look at all these 2-day candles, unbroken since the 22nd of April. Although we hadn't had a lot of volume there. Didn't hit the average volume, came close to it last week and this week. Again, nothing matching those 2 huge weeks of the down move on the 31st of March and the week beginning the 7th of April. So again, where are we now? We're at an 80% bullish on the S&P 500. The entry point's a little bit higher than where things are right now at 567.22. We expect about a $2, 78% move left after the big moves that we predicted earlier in the week until we hit some resistance. An 82% back test accuracy. And again, why are we where we are? Well, here's our trend summary. The broader trend is bearish on the S&P 500, but recent green candles across all time frames, and especially the 195-minute and 2-day chart, suggest a bearish reversal. For the next 5-day plus horizon, we think the S&P 500 is likely to continue upward. Now again, got to keep laying down those green candles. Don't just jump in on Monday because it's Monday and because you heard we have an 80% bullish probability of up movement. No. You want to see green candles forming. And again, we don't have a lot of room left till we hit some strong resistance that we could push through. And we'll keep you posted as we do that. But again, remember, we're not a stock calling service. We're an education firm. We want you to practice trade with us. We're not out here giving you market advice. You don't pay us for anything. We do this for free, and we want you to learn with us. And of course, if you appreciate what we do, then become a Patreon supporter, and you get even more. You get my new book, 3-Wave Trading Advantage. And in addition to that, you get our 3-part series, Options Made Simple, The Charting Wealth Way. Now let's keep going. Where are we on the Qs? Well, it looks very similar to the S&P, doesn't it? We have a 75% bullish direction over the course of the next 5 days. Again, just where it was yesterday. Not as strong as the S&P, but up very nicely. Got about $5.43 of continued movement. Jumping in points about $1 from where we are now. About 75% from where we are now at 489.57. 78% back test accuracy. So again, we think things will continue up. As we look at the trend summary, the broader trend is bearish. Recent green candles across all time frames suggest a bullish reversal. High volume on the 2-day chart supports the 5-day plus upward move. So we will keep an eye on things. Hope to see them continue to move up over the course of this next week. What about 20-year U.S. government bonds? They weakened on Friday. You can see where the first day of the latest 2-day candle heading down after 3 up candles, but it was weakening over the past one. You can see where the Monday, Tuesday, the 28th and 29th of April we had things boost up, but then a green spinning top for the 30th and the 1st, and then things down on the 2nd. You can see those 2 down days, 2.5 really, as things started breaking in the morning on Wednesday, and then down Thursday and Friday. So things weakening. Where does that lead us? Well, we're still bullish. Again, I'm not bullish. I've not been super excited about what's been going on with 20-year U.S. government bonds. But as we look at our trend summary, the broader downtrend is being challenged by recent green up candles. That is this little one here that we see that by the end of the week turned into sort of that sagging little green candle with a nice wick on top. And let me zoom into that because I can't see. Is there? Yep, there's a little wick on the bottom. Let me move that out of the way. Yeah, there's a little wick on the bottom. Now we're going to have to go back and we're going to redraw that to make sure it's correct. There we go. So yes, there was a little wick on the bottom. So again, a weakened green candle, but nonetheless, the 195-minute pullback appears to be temporary, and a 5-day plus bullish move is likely. Now again, it's laying down red candles, so you wouldn't be jumping in unless you got what? A nice green candle on the 195-minute chart and decent volume. Let's move on from 20-year U.S. government bonds, away from stocks, into gold. Boy, gold has just been beautiful, hasn't it? Now, as we look at it, we see that, of course, this was a weaker week for gold after those 2 gigantically strong weeks. We can see where gold slid sideways and then down. It was up a little bit for the day, 0.17%. Again, recovered more in the morning than it did in the afternoon. But where are we? We're still 80% bearish on gold with an 85% back test accuracy. Now, again, nothing is perfect, but our back test accuracy does lead us to believe and hope that we're going to continue to see some good up movement in gold. Our trend summary is that gold's broader trend remains bullish, but the 195-minute and 2-day chart show a short-term pullback. But for the 5-day plus horizon, uptrend is likely to resume after this correction. And you'll know the correction's over when things start going up. But you're not jumping. You don't catch a falling knife. I always loved that. I remember one of the training masters I learned from, he loved using that phrase. Don't catch a falling knife. Wait until things turn around. Now, let's see where we are lastly on Bitcoin, up 0.40%. We have seen Bitcoin move up, slide sideways down a little bit, move up again, topping about the same point over the last 2 days. We have reached a higher high this week, which is nice. Volume hasn't gotten up to average. You can see where it's been below average for 7 days now on the 2-day chart. And again, volume, it's been back and forth on the half-day chart. Last week was above volume. Week before not, but the 2 weeks prior to that, the 31st of March and the 7th of April, those 2 weeks higher than average volume. So slowed down on us this week. Where does that leave us with our trend summary? Well, the broader trend was bearish, but recent green candles on the 1 week and 2 days suggest a bullish reversal. 195-minute pullback appears temporary, supporting a 5-day plus upward move. We are 75% bullish on HODL, which again is the Bitcoin ETF managed by VanEck, and we've got an 80% backtest accuracy. So again, hoping to see better and better things out of Bitcoin. That's where we are, my friends, as we end this week. It's good to be back with you after that 1 week hiatus. I so appreciate all of your support, all of your nice emails. Again, you have questions, problems, concerns. We always love to hear from you. CW@chartingwealth.com, and Patreon members, thank you so much for your support. What you stand behind and support tends to stay around. Keep that in mind. God bless. Have a great weekend.